And away we go on a Monday, everybody. How's it going? Let's get right into it. Want to talk about the major markets first. Macro picture actually starting to do something, and we have to take notice. Talking about green shoots, if you will, but this is S&P 500. And I think we're shifting probably to this futures chart as one of the leading markets to be following immediately. Let's see how this progresses. If we can get 1 or 2 more days out of this zone, you have yourself a completed type 2 reversal in the works. A lot going on there. A lot to consider. Big shout out to everybody in the chat. How's everyone doing today? Thank you for showing up. We're here Monday, Tuesday, and Thursday, 12 noon Eastern. That is New York, or preferably Miami, East Coast United States time. So everyone that can make it, I know we've got people from all over. Welcome. New York time, trading time. Anyway, want to talk about what's the potential here for at least something, relief rally. Can we hold the low for a temporary relief rally? We're not going to flush it. They don't want to take it out right now. If they were going to take it out, it would have been at the hop. It would have been on the flush test under 35.46. They held it. You're 3,800 now. You're really squeezed on the S&P. You're talking about, a mere range of, 5% dictating what's going to happen. So I think what the beginning early action of this week, can we get over these prior week highs, start new highs for the month, and then form a fairly nice monthly candle? That's what we're trying to do here. This is what the monthly looks like on the futures, S&P futures. Same as SPY and the rest. Let's just take a look. Monthly chart's still ugly. Forget the patterns, forget everything. Let's just look at the price action. There you go. At least this did not close under 3,600 for the month, and we have, obviously we'll be finishing up the whole month next week. So how we shape up this week, if we can make progress, is going to tell us a great deal of how we'll move forward into the end of the year, because I really think it's you finish the next week and then you treat November and December pretty much like one month, one long month, where everyone's then positioning for January and 2023. Think of it as like a lame duck trading session. How are we going to finish that up? How are we going to finish up this year is, depends a lot on the next week. So there you go. If this was really ugly, we'd be under 3,600, probably making new lows, and that would close under 3,600. So take that for what it's worth on the S&P futures. And then the weekly chart. Listen, we do have a few things here. We did have an HSI that just registered last week, and trying to come off of some oversold readings. So, but still in the downtrend. Not much has changed from the whole story of this year. And this is exclusive. Really, this bear market in the S&P 500 is mostly 2022 phenomenon. Incredible. Did we make the peak? We might have even peaked the first day of the year, opened up high, and then just sold off. So 3,600 on the S&P, call it 3,550. I think that's your key make or break for the whole scenario. And so we penetrated the lows. At least you didn't follow through to the downside. But now you have that last ditch kind of secondary retest that there's the point that has to hold. 3,600, I still say your larger B point scenario. This is S&P futures. Okay. You did hit the 50% retracement level of the whole COVID rally, which is a significant point, can be a temporary point. That's not a surprise. Although we're still treating this whole potential M formation as that's the midpoint. So we're going to see, does this little 3-week, 4-week pause, does it yield anything more than a counter trend reaction? With the longer term, bigger scenario, the big bear scenario across the board are these 886 retracements. We've already, in my book, formed 4 of the 5 legs. The B point here, that's the true BAM phenomenon. We tried to break down to shoot the gap, the 886, didn't happen. And we've kind of stabilized for 4 weeks. So that's where a few weeks time, several bars, price bars, okay, give us a little more time on that. And this has a lot to do with this daily scenario. So come back here. Could be still just in a type 2. We catch some bids down here at that 35.50 level for a move, maybe to retest the bearish pattern, make a run to 40.60 at a minimum, just a couple of the targets that we could remain in a downtrend, remain in a bear market, and still do a retest move like that. At least there'll be some trading activity. Maybe that's the little counter trend rally before year's end dump. Either way, patterns, they're there. Confirmation, it's there. And so I will keep this whole short-term scenario in mind relative to what the weekly 50% level. We know that these lows, those lows, the October lows, they have to hold. Anything flushes under those October lows at any point forward. It could be 3 months from now, it could be 6 months from now. We know that that eventual 886 retracement will be tested. I think you're at a point right now where you're trying to push higher off of a couple of signals that warrant enough attention to say this could be a little counter trend rally here. You couldn't flush it through. You had no major. You had a breakdown. You took out June lows, but it wasn't a failure. And with a lot of the daily patterns, we're now doing 2 of 2s. You have to respect that. That's where we are. And it looks like, S&P, what's that up now? 38, 36 now on the day. NASDAQ was flat. I think that has a lot to do with China. And I wouldn't, those China stocks, maybe we'll look at them briefly, but not something I really pay too much attention to, seriously. I think there's a lot better vehicles. But here are the Qs, or actually, let's go to the NASDAQ futures. So NASDAQ futures still hovering at this, below some critical support levels. Took out June lows. Doesn't look great. Really doesn't. I mean, S&P's in a much better situation, relative position within the harmonic pattern framework than QQQ. But these lows, and essentially 11,000. I think it's pretty firm that the street is saying 11,000 is the defense point. We don't want to see it, under 11,000. Then people are going to start thinking, no, this is going to roll under 10,000, and that's how you get down to 8. Same deal on the 886. Look, there you go. There's the COVID action. That's a monthly chart, but your 50% level was already hit, and now you're just kind of checking back underneath that. Let me go to the weekly. Remember, this is the only consideration under these lows. There's the BAM. You go down to the 886. Just to trace it out. So we're connecting dots here. Going off the COVID low, there's X to A. And then A to B is a rather extended segment. I also mentioned that this could potentially be some kind of Gartley Either way, the ABCD works out to 7,800. So just be aware of that. That's still, look, that's the longer term scenario. We could get a daily bounce in here for a short period of time off of this retest and off of some of these recent triggers without changing the longer term. The other one that is, turning on nicely where it should, Microsoft, now 246. That's popping out of that zone with confirmation, nice price action. I mean, again, this is where I would start to think, even in a counter trend reaction move, we go 270 to 287 off of that low. I really, it's something like if you're going to give it a little more time, enough time's been had. 241.60 was the top end of that range, and then incredibly 221.75, the hop level, was pretty much the exact low. Take a look at what we discussed there, but that's one of the big ones. That's one of the ones that has me thinking, don't be sleeping on a counter trend rally. Maybe people are going to get nervous. We're going to look at some interest rates here in a second because that doesn't bode well still until that changes. You're going to have to be concerned. But the larger patterns, these 2 of 2s, you got to take them for what they are. It's at a minimum, we'll give you a relief rally. Let's just think of that. I mean, we look for the reversal, but it could be a short-lived march up to the target 1, target 2 area. But that's still up from where you are now. And then semiconductors, which I still think is the key sector for tech. Here's Micron, 2 of 2, continuing to push higher off of the back-to-back patterns. Here's the Semiconductor Trust, ETF, SMH. Big, beautiful. Probably one of the nicest type 2 setups that I've seen in a while. And let's walk through it really quick. I think I did this last week, but it's even better positioned today. Okay, you had reaction back in July down at that 1618. Ideal move up to target 1. Okay, from there, hit target 1 and then register the HSI that basically says it's over. And you still did the check back. Check back, then rolled over. There's the signal. Draw the line straight across. And then 1, 2, by the second bearish candle, this is something larger is developing. Take a look here. I've been saying this for a few weeks now. And so everybody that's working with harmonic pattern collection and looking at zones with HSI, this is a really helpful tip. It's a kind of a delayed confirmation tactic, but it's really strong when you get that. Yeah, the check back. Okay, that happens. There's the signal. Then you have the check back. Okay, the check back. Then you look for 2 bars that confirm. So it's a bearish check back. I want to see 1, 2. There's 1. There's the second bar. By that point, I know not only is this going sideways long enough, but it's responding off of the trigger. And the other thing that helps when you're identifying HSI signals at these levels, where structurally it has to go back to. And you would anticipate that return from here, which it did. And now, look where we are. Deep oversold, 1, 2 triggers. But here's the interesting thing. Take a look at this trigger. There's the retest point, 194 and change for SMH is the big point you'd want to look at. It sets up. Okay, it signals early. That's the other thing. That's an early signal. Goes up, retest. Now, this is the thing I've been noticing with these checkbacks, especially when they come back pretty hard. You're going to use, you usually take a couple of bars before even getting some kind of counter trend move or response off of the signal. So I still say wait for 2 candles that confirm what the setup is telling you. Bullish setup, I need to see 2 bullish candles after the checkback. Checkback's green, bang, it's after. The checkback could be a green bar or a red bar, doesn't matter, but it's really 1, 2. It's at that point. And that was on, what was that, Wednesday of last week, around 178. SMH is still making progress higher. So I think these type 2s can take that long, but you have enough there. You have enough there where this could start to get back, even in a counter trend rally, up to 200. If we're really strong, maybe target 1. But that's putting in all the work you need to see for the type 2 reversal to try to at least make an attempt. It's close. Tough to see. It's not an easy environment. Let's quickly just look at the yield charts. 2-year yield, all right, nice to see a little rollover. Was 460. Okay. Here's where we are on the daily, those daily, weekly. I mean, just insane moves on interest rates. And this is what is the problem, the real backdrop behind the whole market. There's 2-year. The 10-year, remember, has the big pattern, but it's failed. And let's go to it's a weekly. Take a look here. The bat pattern with the hop level at 366 is now trading 420, 419. Recently hit a high, what was that, 430? 435, 434. Still on the weekly basis, and this is something else we talked about, that HSI and amplified, the 2 indicators, at least they've started an inflection. They're starting to roll over on the weekly, and we've been talking about this the last few weeks. Until that would roll over, you're going to still drift higher. And even if this could come out of the zone in the next week or 2, interest rates still aren't going to make much of a move until they do. You won't get this to roll over. You won't get the rates to roll over until HSI is out of the zone, amplified RSI out of the zone, and then start to accelerate. That's the key. That's the key of the whole market. It's going to at least be one of the reasons why the market will still have hiccups along the way. But the 2 of 2 thing, where we are right now, I'm trying to see if this, can this be at least a temporary spot? I don't want to say, hey, massive reversal, massive bear market bottom here. No, let's just stick with the 2 of 2 stuff. Let's keep our eye on things like the rate scenario. Even if we're looking for one weekly candle, a reversal candle, we have a bearish pattern. But look what it's done. I mean, it is remarkable. That's August 1st. Okay, here we are, October 24. And essentially, 14 weeks, working on 14, 15 weeks up, straight up. Probably one of the strongest moves in the shortest periods of time ever, with that size of percentage increase in rates. But we need one candle, like take out last week's low. Give us a big bearish candle. And last week's low on the rate was all the way down at 4.01. Likelihood of that dropping 20 basis points and closing, or even 30 to get underneath 4, take more time. So again, this rate scenario is super strong. That's one of the big macro real concerns that's holding down surely the markets and holding down the possibility, the potential of these type 2 reversals to give you a nice move. Because think about it. Isn't this an ideal bullish scenario for us? At least for a sizable reaction. I think that's something where you come back to these times, and I'll look at one or two other ones that we should be paying attention to, but these are the times. A real hairy backdrop on what potentially might go wrong in this market, or with interest rates doing unprecedented moves, and they are unprecedented moves, certainly got to heed caution. But you have a lot. And so I say, line it up, get real close on it, and prepare for at least maybe starting to nibble for a trade. Here's Tesla. It's back down in that zone. Type 2, structurally on the weekly chart, complete. I think the daily is probably the finer tune of the two, especially for HSI. We've been looking at the basically that 208 level for a while, and here's on the daily. Okay, not much showing on Tesla yet on the daily short-term time frame, and then the weekly as well looks like this. Oh, that's not good. What happened on my HSI again? Hold on. Let me go to this platform. There's Tesla. Go to the TradingView platform. There's the weekly. There's the bat. Okay. HSI in the oversold zone. And has confirmation too. Amplified RSI in the oversold, trying to get out. Hasn't budged yet. But your big bat 886 number, again, is 208. You're trading 206. And you've been down here third week. Down here. Last week was a bullish candle. Perfect example of waiting for a big setup like this, type 2 retest, and then give me at least one bullish candle. That's absolutely the whole idea right there. If this is going to be something, yeah, it'll take a few weeks. Not surprising. I want to now get the confirmation. We do have a check back from the initial reading. Okay, the first confirmation has been retested. So if we get a secondary bullish candle this week, that would be significant. These are little signs of the type 2 retest of these bullish zones starting to show something, at least for not the nightmare scenario to happen now. How about that? How about put it that way? How about where the sky's not going to fall right now, so maybe we should try to take advantage of the possibility of these type 2 confirmed retests yielding something over the next few weeks. Been tough year for a lot of bullish stuff, but that's where we are in the framework. And we're, like I said, 3 weeks into Tesla, and you're just grinding this 200 area. Even if Elon has to sell 20 billion in stock, if he sells it and there's some kind of gap down, could very well be the capitulation low you're looking for into a major zone. So I posted something on Twitter last week that said, look this week. And yeah, I would be looking this week. Not doing anything yet, but looking really, really on it. One other interesting thing before I forget about it that we mentioned and explains, some of the recent rally bullish behavior has been the shark pattern. We had this shark resistance in the VIX, and everyone's looking for the VIX to go to 40 or above 40 to be the capitulation sign, and it just stubbornly won't get above this 886 at 34.84. I can call it 35, but it's due to this whole pattern for the year for 2021. And you even had and registered an HSI on the volatility index, which suggested this should come off a little bit. Come off maybe down to target one, which is around 26, or even check back somewhere lower where you have these prior signals, prior support lows in the low 20s. When you have something like that, again, that recently changed in the last few days. Last week, we registered that by Friday. And you've kind of stalled at that 35 level. So, again, don't want to get slammed too far to one side, but that could suggest why this market's getting a little bit of a breather, where volatility lets up a little bit, and we wouldn't expect any kind of surge back in volatility until we can get another oversold reading. Here's HSI. Have HSI come all the way back down to trigger another reading like it did back in July, early August point, and then try to go again. But it's not happening now. We've been waiting and waiting and waiting, looking for follow through, and it's just not, it's not going to happen now. Doesn't want to come in there. So we'll be patient with it. I really think this whole bear thing is either going to be strictly a 2022 thing that washes up between now and the end of the year with some kind of extreme washout, or we take it into, say, well into next year, take it into April, May timeframe, March or April, before you see some kind of change. Keep an eye on all of those. There's just a lot of these major signals that have come together. The one or two other big ones that I wanted to highlight before getting out of the stocks in general, things like, take a look at Goldman Sachs. That one held the prior low. A lot of the bank stocks did pretty good. Here on the daily, I know we got a crab pattern down here. There you go. Oh, it's a butterfly. It's really tough to see. Practically a perfect butterfly. 358.62. Where if this holds the low and Goldman can, get above this 340 or even 350 range, that opens it up to target too, and could still be in a downtrend. You do the 1-2. I thought that was pretty interesting. The JP Morgan too. The fact that came down to the 102 and not only held, but held quite well, held firmly. What's the weekly on JP Morgan? I think that might have been something else. 102 on that though. Oh, really quick before I jump to crypto, here's dollar yen. That was the standout currency market that I really felt once we got above the 145 level, was trying to shoot for 168. Go to the monthly or quarterly. I know this is a super long-term pattern. Amazing. Yeah, it might even be quarterly for the yen. Yeah, it is. So here's the quarterly, and this is probably the most important currency chart, bar none. The quarterly crab pattern, we could say it's a delayed type 1, but that's what it is. It completed all the way back in 1993. Did the first attempt, could not get out of the zone. I mentioned this a few weeks ago. Once we got out of that zone above 138, 140, that we could be looking to shoot that gap up to 168. And don't dismiss it. Listen, if we're looking for some kind of major harmonic event that can end the crazy yen run, it's likely to this target 1. You get up to target 1, that's type 1 reaction. I got to check the HSI. Why is it doing that? But that's 168. And here's the daily. I'm going to see why quarterly HSI has not been working, but just, this has been straight up amazingly, probably one of the strongest markets of the year. Was trading above 150 last week. Let's go to the weekly. There you go. Remarkable. Here's an interesting little tidbit on HSI to look at right now. So if I'm looking for yen to even take a pause, there's the last weekly HSI, but we have the check back. Now there's one bearish candle. I would need to see a second bearish candle before I would think anything more substantial could happen. All right, so this is still, despite this little retracement last week, I mean, this is as strong as they come. And I again say, stick to that quarterly target, 168. Until then, I mean, trade it. Yen's probably moving in a way that it hasn't in decades. This kind of action in the yen is, look at a 5-minute chart on the yen. Some crazy swings. There you go. Hundreds of pips, 500. That's thing swinging 500 pips. Amazing. One or two more. Of course, with all, speaking of crazy, British pound. So maybe is this capitulation? Whatever went down over the last few weeks, as crazy as that was, what's down here? Because if you go out all-time history, we're at the 886. We're actually below it. The 886 was really 114, 115. And the weekly, yeah, here's the weekly. Last weekly HSI is around 108. So that would have to check back, come back down to 108 and stabilize here for a few weeks before I would even look at that. Again, go to the quarterly time frame. It's pretty amazing. Just an amazing drop. And you look at the last, finally retesting the range of the last 40 years. But your 886 is here on the quarterly, and treat this, it's 119 level, maybe a little bit lower. It's off. 117. If this is the secondary retest of the 886, you need to see something. Again, a bearish candle. Excuse me, a bullish candle. You would need to see one bullish candle on the quarterly, or even what's the monthly look like. If you're in trading currencies and you're looking for a major bottom and stuff like this, or looking for a top in dollar yen, hey, we need to see individual action until this this crash, which that's what it is for the past year. Go to 140 down to 105. That's a crash. Check it out. I do. Yes, Snipes. Snipes is a good comment there in the chat. Snipes is saying just the definition of capitulation: dramatic surge of selling pressure in a declining market, and that yeah, this is 1,500 pips down flush in a month is a huge event, but we need to see it. Look, weekly is still oversold across the board. That is triple confirmation on your, monthly, but you need a few more bars to round that out. And, one other one, of course, euro, not much better, probably worse. As low as 95, but still under the $1 par level. Take a look. You're at the 886 swing off the 2000, coming up to it. Like, right there at 91. That's a logical target. That's a logical target. Nothing, my point here is, as dramatic as that has been, nothing really can even be considered. This isn't even close to being over until you can establish some individual candles. Here's the weekly. Was projecting an alternate bat, and I think we can say that failed. This is one of the beauties I find with HSI. Look, a pattern with no confirmation is probably a reaction at best. That's why I recommend having confirmation. In this instance, you got a little reaction, but then you got a counter HSI signal bearish in a bullish trend. That always shuts it down. That's always something that says, hey, I want more time. I'm going to retest the zone. And we still haven't, have we even registered? Nope. HSI is now deeply oversold on the euro on the weekly. You're probably 2 weeks away until that stops. A lot of this that we're looking at across the markets, look, these have to have measures, indicator values that speak to what it means to be overbought, oversold. And if they don't have confirmation with them, then we have to be really careful, or just wait, be patient. It's probably a better way. Just be patient. Yeah, I agree. There, yeah, the comment of still thinking there's still more to come. Sure. Look, if we don't have the bullish patterns, we don't have the setup, or, conversely, you're looking at interest rates and you have a bearish pattern, but you still don't have any confirmation and it looks like it's blowing it out. You got to respect that. I mean, look, this is not a normal interest rate environment, and interest rates are one of the predominant market mechanisms that influence price. And it hasn't, interest rates haven't done anything for 10, 12 years, really. And where we're coming from at zero policy is, back to, now we're close to normal, but we're doing so in the fastest way ever. We've never had such a rapid change. And in that way, you're blowing through. We see it in the price action. We see the pattern. We were targeting this 290 to 366 larger range all year. Can we see something turn around here? Nope. Still waiting. Still waiting. We're nothing. We're starting the week, and look how you're starting the week already. Trying to make a run up, retest last week highs. And I still say that, look, all the bonds, the bond chart and the prior resistance targets of how high these could go still suggest they've got, structurally more room, because you're breaking out. You have to go to the longer term charts. Go to like the quarterly here on your rate charts. Oh, there you go. Oh, wow. Check that out. I don't know if I ever saw that before. It's a quarterly chart. The software is generating an alternate bat. Look at this. I can't believe I didn't see this before. So the 3-month chart, the quarterly chart that is a massive bullish bat, alternate bat, that the hop level was at 1%. Amazingly, look at where HSI confirmation came in, right at the low. Boy, this is something I'll have to look at. I don't know how this eluded me. Target 1 is 8%. And we're right back in the zone at 4.35, which is the prior XA. I'll have to look at this. I wanted to look at the other chart I was trying to get to was really the 2-year chart with this phenomenon. I'll have to go back to that 10-year chart. Those with the software will have to look at that, because if we don't stop here, and I don't think we're stopping here, that is something we have to consider, because you get to these points of like, what the heck is going on? Remember this? We traced this out. I remember tracing this out when we really started to bark about interest rates and inflation. And I was tracing out, connecting the dots on this shark pattern for the 2-year yield. And that gets you with an 886, 479. That's only 30. Okay, that's it. 30 basis points from where you are. That could easily be reached in the next week. And look at HSI and amplified on the month. These are monthly chart. No, sorry, quarterly charts. Quarterly. So that is not rolling over. Amplified RSI. That's amazing. That's above a 90. And that's the strongest reading we've seen since. Yeah, you have to go back to the 80s. So not anytime soon. And I still say that these targets are higher with 5%. You know, you get to 4.8, call it 5. A lot of people will start to say, hey, 2-year yield on 5. Yeah, and then if we'll look at that range, but if we explode through that, then people are going to really be scrambling. If something happens here, and it's probably the number one chart to be looking at, the macroeconomic charts of all of those to look at, it's going to be this 2-year chart. Beyond that, it's amazing that the markets are continuing or trying to rally in spite of what's happened here. But, you know, I'm not going to try to connect directly. I'm going to monitor. Monitoring interest rates this year in a way I don't think I've ever looked at them before, just because they've never done anything like this. One or two more. Really quick, get to natural gas and crude oil. Let's start with natural gas first. A lot of people asking me about UNG and Boyle. Here's nat gas back under the 6 level, as low as 5. Let's go to the daily. All right. 6 is support. 9 was resistance. That's what we've been saying. 6 and 9. Off of the crab pattern, which is what we were talking about way back here in September. Amazingly, we're at target 2. That's 562. That's nat gas futures charts. But check it out. Here's the first HSI we're trying to print today, coming out of the zone today. So for those that have been interested, here's the UNG chart. That was a 3 ideas recently. One of our 3 ideas. Look at this. We were targeting 1826, target 2 reached. I'd say be done with this now. This is, there you go. You're in the oversold with HSI. Ideally, yeah, you'd want to wait for that to pop out. But hey, we were up here around 30.50, around $31. Let's go to the daily chart. And yeah, that's the chart we were looking at back in September. It's an amazing move. Hop level 3071. Target 2, 1798. You hit there yesterday. You're done. You're done with that target 2. Check that out. Really quick, how do you get the software? Someone's asking. Okay, thank you for that segue into where you go is go to harmonictrader.com, please. Start there and become a basic member. Register now as a basic member. Just submit your email. All the information, why I say go become a basic member, because the support, the educational videos on how to read it, really what makes a pattern actionable, critical, or you're not going to have realized the success you can see. The slight differences confirmation techniques are really what trigger certain patterns of being opportunities and others just to be patterns. But go to that page and follow these instructions. Go here. Someone was asking where to purchase. Only purchase it if you've taken the trial first. So send your username to hpc@sr-analyst.com. 14-day free trial. And the other thing, again, several people have asked me about MetaTrader and eSignal recently. I would say if you're trading currencies, go for MetaTrader. If you're a futures guy, you've got, you don't mind paying some money for the best data, go with eSignal. Check those out. Those are the resources you absolutely need. I think everyone should be with the TradingView product. I mean, everybody that's here, listening or otherwise. And then since most of us are running multiple screens, I love having the TradingView charts, the mobile, and then having a legacy platform like MetaTrader or eSignal. This is eSignal. So that's eSignal. But that's how we're doing it. And the 3 ideas video that I posted in September was just spot on. So that's it, 2 of 2. This could go lower, okay, but I like some of the stuff we're seeing where nat gas is. Look, I think longer term, it's just range bound. I think longer term, look at UNG, or we'll look at nat gas in a second. Look, there's a weekly crab pattern, and that's only a type 1. So I think 18 on UNG could be real firm support before we try to make another run back up to the 32, 34 area. Think about it this winter. Think of this as probably the correction before we set ourselves up for the winter, whatever this winter nightmare is going to be. Let me go back to nat gas futures. Got to think this 550 level, pretty stiff correction, and only takes, again, one weekly candle. We've been down, look at this, 1, 2, 3, 4, 5, 6, 7 weeks in a row. I'm looking for a bounce here, folks. Did that get under? That got to what, 4? It was 475 at the low on NG futures. But typical. That's nat gas is volatile like that, but still within the framework. And then Boyle, we've been looking at since 40. Okay, still have no confirmation yet. Where's my damn HSI? Hold on. Go to the 4-hour chart. Don't know why that's doing to me. I'm having it with HSI, but HSI, even on the 4-hour time frame, hasn't done it yet. Let me see if I can fix it. Maybe come back to this. Yeah, I have to see what's going on with this data here. Boyle on the 4-hour time frame. Your 886 was 48. And hop level at 26. We're somewhere, I would say, around this 30, 35 level for Boyle. Boyle, extremely volatile. Remember that. Remember, I prefer UNG over Boyle, but for those that are interested, take a look at something like this. Waiting for the breakout. Maybe we get the 3-bar turnaround. We have not had a 3-bar breakout. Today's the first day we've had an individual bar breakout. But somewhere maybe under 40 generally for target 1 move back to 75. We have been in this spot before, specifically with Boyle, and so here you go again. This has been one of those sleeper ETFs that, we've had a number of nice moves in this vehicle. Nice harmonic patterns. Let's go to, say, something like crude oil ETF like USO. What's that doing? It's been quiet, been kind of muffled, really. Look at the daily action here. Sitting on a butterfly right off the top. The 127 is 69.37, and this is another situation where probably we need to wait for full retest of the zone or another HSI. There's the first, well, under the hop, but there's your most recent HSI back at the end of September. Didn't get a full type 1 test. That's a shame because this would have led to maybe being a little more significant. So I'm looking, under 70. I'll look at USO, but nothing here yet to trigger that. Could be a little bit lower even on USO. And crude oil has not done much. Languishing even, I would say. Where just grinding, sliding sideways. Looks like this. Weekly chart. There you go. Where is it? No, 4-hour chart. It's a shark pattern down here. That's a bearish bat, but where's the shark? 1 second, 1 second. Oh, here it is. I didn't have it selected. So I know it's a shark on the daily. About 84. This should have it. There's the shark. Okay, didn't have it selected. Again, been looking at that forever between 84 and 88, and it's doing nothing. Doing nothing. Look at the last HSI, bearish. So what's that tell you? More time, need another signal, lower test. Look at your indicators. Trending lower across the board. Still lower. HSI, that would have to go down. That needs to hit a test there and then come out. Not doing it. So surprisingly, let me get on this quickly because XLE, the energy ETF and those stocks have done all right. Kind of getting to a point where they're finally overbought. And I'm looking for HSI to trigger in the next day or two. My question is this a Gartley? It doesn't have the ideal, looks like this. Definitely a W formation, but it doesn't have your proper alignment. So I'm looking at something like that structurally. But this B point right here is too high of a peak. Probably the better of the big ones, ExxonMobil, which is sitting in a big bearish zone. Testing, did it hit? It hit. Okay, it hit the hop. Amazing. 107.52. 107.52. Today's high was 107.68. So that's it. So there's your 2 of 2. Hits the hop and HSI. At least this is HSI is working on the daily. Look, that rolls over. That would confirm it. And that would say 2 of 2. So watch the stocks. Watch the stocks. Are the stocks going to break out here? With crude oil not doing much, that's I find it's an interesting combination of the two. It's definitely going to tell us whether or not if the market can go higher, crude oil has to go higher. But that's it. That's not in the position. That's a 2 of 2 position there, about to trigger. Yep. No. Yeah. How about stuff like someone's saying Valero? Sure. Valero coming back up. Looks like a retest. Wants to do a bat. Wants to come up and hit the 886. Like this. B points at a 50. 886 is at 140. And what's that long-term chart look like? I mean, weekly or monthly, these have been, after a sharp pullback over just a few weeks, trying to break out these prior multi-year highs. How about monthly? Yeah, that's a beautiful monthly chart. Pretty strong. I think you break out above 140, you clear. That's one of the refiners. The other one, ConocoPhillips, same deal. ConocoPhillips all-time new highs just in the last few sessions. Yeah, that's got to keep an eye on these. What is ExxonMobil going to do? Do these keep going up? It's not a place where I'm looking for a long entry by any stretch of the imagination. It is quite strong, pretty remarkable. Here's a update we haven't looked at in a long time, but it's Marathon Oil. It's been one of the big long-term winners we mentioned way back. A monthly chart. Yep. Where's that monthly? I think that was oh yeah, it was this bat pattern all the way back down there. Strong monthly action since hasn't stopped. With the exception of 1 month. What was that back in June this year? No follow through on that downside. So wouldn't be surprised to see this eventually come back and try to do all-time 886 reaction. We'll see with what ExxonMobil and XLE and the others do. It looks like these are trying to shape up for maybe a dash this winter into January. Been tough. Let's see. There you go. Well, there's a deep crab right now on Marathon Oil, 29.20, but you still need confirmation. That's a lot like ExxonMobil. And you're hitting HSI right now. You're overbought. So give it a couple days. We'll come back by Thursday and see where this is. This whole 2 of 2 phenomenon still needs confirmation. And keep in mind, again, interest rates driving all of this. Interest rates are spiking higher, and these continue to go up. It's tough. Really quick, I want to jump to crypto and wrap up with crypto because we've gone a full hour already. Look, we'll go tomorrow. I'll start with crypto, but want to show the total crypto market cap. Just flatline. But what it flatlined off of, here's total 3. It's one of the ones we've been looking at. That has done recently the signal, gave us a short-term bullish signal. Now, is this going to be a dud? Or is it going to be something that at least can bring a little action, a little life back into crypto? There we had it last week. That's an oversold reversal in HSI, triggered, and then it checked back on the 3rd bar. Okay, early. Remember, that green arrow is always early. The thing I've been saying, recent sessions, let it check back, and then show me 1, 2 bars that agree with that bullish signal. So that's here. That's there. Yesterday, Sunday, nice follow through on a Sunday. Today, all right, you're back down. The whole point is you can start moving stops up again in a major way after this has been registered, triggered, checked back, confirmed. I would say essentially like right there, 345, 347 billion on total 3. You can relate that to the total 1 or total 2. But you're at a point. We're at another point where, is this going to be a dud? Is this going to be a dud like it was back in here? All right, the check back, 1, 2 green candles, and then you just kind of bump, grind, and then go back down. So look at it that way. Even think of it as like you need to see something happen within the next 30 bars, probably less, because it really starts like right there. So if crypto is going to do anything, it better do it by mid-November. It better come off of these lows or just write it off until January or even early spring. It's that kind of a scenario. Here's total. It's not the same. It's look, you have some patterns here, back-to-backs. You didn't register it though, as it's not as ideal as the total 3. The DeFi was, yeah, this is another one. Look, has one of these small patterns, small shark, back-to-back with the bat, but you have the confirmation. Just check back. Yeah, this was last week. We talked about this last week, but we got the 2 bars. So there's Sunday. There's the second bar. Again, start going off of prior day's lows. You're out of time here. This is it. This whole thing. If this green trigger of at least an oversold relief rally is going to take shape, you have to start now. 1, 2, 3, 4 days from now. Thursday, we should be above all of these highs. If you're not, and you just continue lower, then you're going to grind the rest of the year. This one has a pattern. You know, that shark, like a lot of these, there are a number that have smaller patterns inside the big zones. They're doing nothing. Here's the probably a new one. Haven't showed this in a while, but for crypto, it's got everything you'd want to see. It's in synthetics. It's 2 of 2. There you go. Butterfly. Type 1, bang, right back to type 2. There's the confirmation. It's just going sideways. And I think this is a weekly as well. Another HSI. Yeah, okay. This does have another HSI checking back right now. I find that pretty interesting. A few other ones have this phenomenon too. With all the consolidation in the last 4 to 6 weeks, we have finally gotten some oversold HSI secondary readings like here and now here. So can you get something? Can you get a bump, a $1 bump? Maybe go to 220 to 350? We'll look at that tomorrow. I think I'll save that for tomorrow because by tomorrow, a few more of these will be further along. Last one, XRP, doing what we thought it would do. XRP coming back for their test at 40 cents. After we had an HSI, again, check what we said pretty much 2 weeks ago. And I wouldn't be surprised to see that come all the way back to 37. We'll look at a few more of these because some of them are getting close. You know, if it's a retest or if it's a secondary test, you know, they have patterns, small patterns. XRP had the small bat pattern even. But we'll hone in on those tomorrow. Plenty of time for crypto, that's for sure. We're in no rush on crypto. All right, everybody. We'll see you tomorrow, 12 noon. Get everything you need for harmonic patterns at harmonictrader.com. If you have any other questions, go to the Discord and go contact Miss Stephanie. That Discord link is on the basic members page right there. Click Discord and log on in. Everything else, you can send me a note at Gmail, harmonictrader@gmail. So until tomorrow, we'll catch up then. Have a great one. As always, go get them. Take care. See you then.